Welcome back to the garage and to another episode of the Token Teardown. If you're new here, this is where we take a crypto project, roll it into the bay, put it up on the lift, and see if it's a finely tuned race machine or just a rusted out jalopy with a fancy paint job. Smash that like, hit that follow. We're building this pit crew one subscriber at a time, and if you like the content, share it with your fellow traders, your friends, even your grandma, because we make it simple enough for anyone to understand. Today's project is rolling in hot from the RWA and DePIN garages, PinLink, ticker pin. This one claims to be the bridge between real-world hardware and on-chain finance. But is it the real deal or just shiny chrome on a weak frame? Let's get it up on the lift. First, the pit crew. At the head is Lukasz Orlowski, ex-VP of Engineering at Engine, MIT innovator under 35, a builder who's lived in the trenches of supercomputers and blockchain scaling. This is not an Anon ghost crew. The team is public, active, and delivering. And huge credit to Christian, our garage's master builder and tech whisperer, who tore down the schematics and gave us the deep dive on what's really powering this engine. So what is PinLink? It's a decentralized hardware exchange. Miners, GPU owners, and IoT operators can tokenize their rigs into on-chain fractions. Investors buy those fractions to earn real yield from Bitcoin mining or GPU rentals, and developers rent that capacity at cheaper rates than AWS thanks to the rebate fund that funnels fees into DeFi yield. Translation: asset owners get liquidity, investors get yield, and developers get lower costs. That's a triple win drivetrain you don't see often. Under the hood, the PIN token is the fuel and the drive shaft. Total supply is 100 million tokens, with about 80 million already circulating. No giant VC cliffs waiting to dump. Distribution went 80% to liquidity, 10% to staking rewards, 10% to the treasury. And the torque here is real. PinLink is funding buybacks with actual hardware revenue, over $800,000 worth so far, pulling tokens off the track and tightening supply. Around 9% of supply is staked, earning governance rights and yield. Utility is strong. You need PIN to pay for marketplace rentals, buy fractions of hardware, stake, govern, and ultimately fuel every lap on this track. Broad distribution means no one whale dominates outside of normal exchange wallets. Think of it like a well-balanced fuel system. Plenty of injectors, no single line flooding the engine. Now let's pop the hood on the tech. Built on Ethereum mainnet, PinLink uses ERC-1155 tokens for fractional assets and ERC-20 for PIN. Security? Audited by Hashlock and Hacken with no major exploits. They've got enterprise-level parts bolted on, AWS Nitro enclaves for secure workloads, NVO indexers for speed, Pendle strategies for optimizing yield. The Pinnacle marketplace is live and moving hardware, over $4 million worth of miners already deployed, and more than 400,000 in payouts to investors. And on deck, Pinance, their Uniswap for RWAs, Hashlink, a hash rate futures engine, and PinPad, a launch pad for blue chip enterprise assets. That's not hype. That's a loaded roadmap with real gears turning. So who's actually driving this thing? Because you can build the flashiest race car in the world, but if nobody's taking it for laps, it's just a showpiece in the garage. PinLink already has a mix of drivers in the pit lane, each with their own set of keys. First up, the Plume network community. Think of Plume as a new highway built just for real-world assets. PinLink is bolting one of its engines onto Plume's chassis through dedicated DePIN vaults. That means Plume's users can hop in, turn the key, and get exposure to tokenized mining rigs and GPU clusters without touching PinLink directly. It's like having a toll pass that works on both highways. Same ride, two different lanes, way more traffic flowing into PinLink's ecosystem. Next, the everyday investors. Not everyone's got the cash or garage space for a $50,000 Antminer rig. That's like saying every gardener needs a John Deere combine just to mow the lawn. On PinLink's Pinnacle marketplace, you can buy a fraction of a rig instead. Own a piston, not the whole engine, and you still feel the horsepower. That's real Bitcoin yield hitting wallets for regular folks who just want to plant a little seed and watch it grow. Then there's the Bittenzer ecosystem. PinLink runs its own subnet node in the Bittenzer network. Imagine a race car tuned to earn TAO tokens every lap it completes. Instead of wrenching on that car yourself, PinLink slices it into fractional shares. Hold a slice, and you're earning TAO passively every time the node does its job. That's like buying stock in a race team and collecting prize money after every lap without ever touching a wrench. Now we move to the AI strategy enthusiasts using Fractalia. Fractalia is PinLink's AI pit crew, algorithms that never sleep, tuning and reallocating yield strategies across DeFi and DePIN. Users can buy fractions of these strategies like owning a piece of an AI-powered Formula One team. It's for the folks who don't just want to watch the race, they want their portfolio running a turbocharged lap 24/7. And finally, the hardware owners themselves. These are the miners, GPU operators, IoT node owners, the folks already turning electricity into yield. Before, if they needed cash, they either sold their machines or sat idle. With PinLink, they can tokenize future earnings, raise capital upfront, and still keep the rigs running. It's like pawning your tractor, but instead of losing it, you keep farming and share the harvest with investors. Liquidity today, steady yield tomorrow. That's a financing turbocharger strapped onto DePIN's engine. So when you break it down, PinLink's not just a concept car under the lights. It's got plume drivers merging onto the highway, regular investors buying pistons, Bittenser fans earning TAO without lifting a wrench, AI enthusiasts letting Fractalia tune their portfolios, and hardware operators unlocking cash flow from their rigs. This is a garage full of moving parts, and all of them are already on the track. Now let's hand it over to Lulu, our head of technical analysis. Yes, she's a pig, 4 hoofs, curly tail, and a nose that can sniff out support and resistance like no one else in the paddock. Lulu's math has 3 scenarios if crypto hits 20 trillion. Scenario 1, PinLink just holds its slice of the market. That's 1.2 billion market cap, about $12 per token. Scenario 2, it doubles its dominance. That's 2.4 to 3.6 billion or $24 to $36 a token, sliding it into the top 100 projects. Scenario 3, the moonshot. If PinLink becomes the standard, capturing 1% of the crypto market, you're talking 200 billion cap and a token blasting into the thousands. That's strapping a rocket booster on the chassis. But here's where we keep it honest. Lulu may be the head of technical analysis in this garage, but she is still a pig. A smart pig, yes, I'd put her TA against half the so-called experts on X. But if you are making financial decisions based on a pig's charts, you probably deserve to lose your money. This is education and entertainment, not financial advice. Do your own research, check the numbers, and never put more gas in the tank than you can afford to torch. And in this garage, we don't sling hopium, we show the black swans. First, regulatory seizure. If the SEC or other regulators decide fractionalized hardware looks like unregistered securities, the gearbox seizes overnight. Second, a tech blowout, a critical exploit in the rebate fund, a Pendle or Ether.fi hack, or a smart contract bug could drain liquidity and shred trust. Third, narrative stall. If AI compute prices collapse, Bitcoin mining profitability tanks, or RWA hype fizzles while money rotates back into memes and majors, PinLink risks becoming just another garage collecting dust. Now, the final garage score, with reasons. Tech stack, 8, because the marketplace is live, audited, and integrated with enterprise-level tools, but still partly centralized. Team, 8, thanks to a proven founder and doxed crew, but heavy reliance on one leader. Tokenomics, 8, with most supply already circulating, fair distribution, and buybacks adding deflationary torque, though it still depends on hardware profitability. Product progress, 7, because Pinnacle is live and paying, but Pinance and Hashlink still need to launch. Community, 7, a strong niche following, but not yet a viral army. Narrative RPM, 9, sitting dead center in AI, RWA, and DePIN, the hottest lanes in crypto. Adoption, 7, with Plume, Pinnacle investors, Bittenser, Fractalia, and hardware owners already using it, but scale is still early. Regulatory build code, 5, the weak link, since fractionalized yields could draw securities scrutiny. Alpha potential, 8, because the upside is massive if execution stays tight. That averages out to 7.4 out of 10, a garage certified contender with real horsepower, provided it keeps the wheels on and the regulators off the track. Drop the next project you want up on the lift in the comments, smash that like, hit follow, and as always, let it rip.